Hello guys, here is Wessel and welcome to a new episode on Coffee and Trading channel. Take a coffee and take a seat because we have indicators to discuss today. Me and Stefan we discuss and after a brainstorm we come to the conclusion and we want to share it with you guys. We are thinking to make an episode once a week where we're gonna discuss about the indicators, what's coming in that week. We're gonna name it SEAP of indicators. We're going to try to explain all the important indicators coming in the trading market space. And we're going to start with US JOLTS job openings. A survey done by the US Bureau of Labor Statistics to help measure job vacancies. It collects data from employers about the business employment, job openings, recruitments, hires and separations. JOLTS defines job opening as all positions that are open on the last business day of the month. A job is open only if it meets all three of the following conditions. 1. A specific position exists and the work is available for that position. 2. The job could start within 30 days whether or not the establishment finds a suitable candidate during that time. 3. There is active recruiting for work from outside the establishment location that has the opening. A reading that is stronger than the forecast is generally supportive, bullish, for the USD. While a weaker than forecast reading is generally negative, bearish for the USD. Okay, now let's simplify this. The US JOLTS jobs opening report measures jobs available by collecting data from employers, job openings, hires and separations. A job is considered open if a specific position exists with work available, the job can start within 30 days, active recruiting is taking place to fill it. If the indicator is higher than expected, then usually it's bullish for the dollar, while lower than expected, usually it's bearish. We're gonna continue with US AP weekly crude oil stock. The American Petroleum Institute reports inventory levels of US crude oil, gasoline and distillate stocks. The figure shows how much oil and product is available in storage. This indicator gives an overview of the US petroleum demand. If the increase in crude inventories is more than expected, it implies weaker demand and is bearish for the crude price. The same can be said if a decline in inventories is less than expected. If the increase in crude is less than expected, it implies greater demand and is bullish for crude prices. The same can be said if a decline in inventories is more than expected. To simplify the text above, the US AP weekly crude oil stock reports tracks the amount of crude oil, gasoline and distillates in the US storage, providing insight into petroleum demand. Higher than expected inventory increase suggests weaker demand and are bearish for crude prices. Lower than expected inventory increases are larger than expected declines, suggest stronger demand are bullish for prices. The next indicator what we're going to talk about is the US ADP non-farm employment change. The EDP National Employment Report is a measure of monthly change in non-farm private employment, based on the payroll data of approximately 400,000 US business clients. The release 2 days ahead of the government data is a good prediction of the government's non-farm payroll report. The change in this indicator can be very volatile. A higher than expected reading should be taken as positive, bullish for the USD, while a lower than expected reading should be taken as a negative, bearish for the USD. To simplify the text above, the EDP National Employment Report measures monthly changes in private non-farm employment based on payroll data from around 400,000 US businesses. Released 2 days before the government's non-farm payroll report. It's a useful predictor but can be volatile. Higher than expected readings are positive, bullish for the dollar. Lower than expected readings are negative, bearish for the dollar. The next one we're going to talk about is the US Purchasing Managers Index. The service PMI release is published monthly by Market Economics. The data are based on surveys of over 400 executives in private sector services companies. The survey covered transport and communication, financial intermediaries, businesses and personal services, computing and IT hotels and restaurants. An index level of 50 denotes no changes since the previous month, while a level above 50 signals an improvement and below 50 indicates a deterioration, a reading that is stronger than forecast, and generally supportive bullish for the USD, while a weaker than forecast reading is generally negative, bearish for the USD. To simplify the text above, the US Services PMI published monthly by Market Economics measures the performance of the services sector based on surveys of over 400 executives in the industry like finance, IT, transport and hospitality. PMI above 50 indicates growth in the sector. PMI below 50 indicates a decline. Stronger than expected readings are bullish for the dollar, while weaker than expected readings are bearish. The next one we're going to talk about is the US ISM Non-Manufacturing Purchasing Managers Index. The Institute of Supply Management ISM Non-Manufacturing Purchasing Managers Index PMI, also known as the ISM Services PMI report on businesses, a composite index is calculated as an indicator of the overall economic condition for the non-manufacturing sector. The NMI is a composite index based on the diffusion indexes for 4 of the indicators with equal weights: business activity, new orders, employment and supply deliveries. A reading above 50% indicates the non-manufacturing sector economy is generally expanding. Below 50% indicates the non-manufacturing sector is generally contracting. The non-manufacturing ISM report on businesses is based on data compiled from monthly replies to questions asked for more than 370 purchasing and supply executives in over 62 different industries, representing 9 divisions from standard industrial classifications categories. Membership of the Business Survey Committee is diversified by 6 categories and is based on each industry contribution to gross domestic product. A higher than expected reading should be taken as positive, bullish for the USD, while a lower than expected reading should be taken as negative, bearish for the USD. To simplify the text above, the US ISM Non-Manufacturing PMI, also called the ISM Services PMI, measures the overall economic health of the non-manufacturing sector. It's based on surveys from over 370 purchasing and supply executives across 62 industries. The index combines 4 components: business activities, new orders, employment and supply deliveries, each weighted equally. Above 50%, sector is expanding. Below 50%, the sector is contracting. Higher than expected readings are bullish for the dollar, while lower than expected readings are bearish. The next one gonna be the US crude oil inventories. The Energy Information Administration's crude oil inventories measures the weekly change in the number of barrels of commercial crude oil held by US firms. The level of inventories influences the price of petroleum products, which can have an impact on inflation. If the increase in crude inventory is more than expected, it implies weaker demand and is bearish for the crude price. The same can be said if a decline in inventories is less than expected. If the increase in crude is less than expected, it implies greater demand and is bullish for crude prices. The same can be said if decline in inventory is more than expected. To simplify the text above, the US crude oil inventories report released by the AEI tracks weekly changes in the amount of commercial crude oil held by US firms. These inventories impact crude oil prices and indirectly inflation. Higher than expected inventory increase suggests weaker demand and are bearish for crude prices. But lower than expected increase or larger than expected declines suggest stronger demand and are bullish for crude prices. Okay, the last one gonna be the US Fed Chair Powell speaks. Federal Reserve Chair Jerome Powell is to speak as head of the Fed, which controls short-term interest rates. He has more influence over the US dollar value than any other person. Traders closely watch his speeches as they are often used to drop hints regarding future monetary policy. That means when our friend from Federal Reserve Jerome Powell speaks, traders pay close attention as his high statements often provide clues about future monetary policy. As head of the Fed, Mr. Powell significantly influenced US interest rates and the dollar value. His remarks can move markets. And that was it, guys. Here are part of what we consider important indicators this week. I hope you enjoyed it. Our coffee arrived to an end. And don't forget to like, share and subscribe. Keep the internet alive. I was Wessel from Coffee and Trading. See you next time. Ciao!